This is the overnight update. And it's not overnight for me. I'm in South Africa. It's morning time. But for those of you in America, this is the overnight breaking news. No pun intended. This is Brian Lewis with MMT Investing, and things just changed for real. So the breaking news is that we broke all of these support lines in one day. We just broke all of them while I was sleeping. Once again, all the cool stuff that I've been trying to watch happened while I was sleeping, and I'm not pouting, but sort of, because I wanted to see this stuff. So let's take a look at the let's take a look at some lines. We'll take a look at bull cases and bear cases, because the bulls this whole time have been smashing that like button right now to help me out with the YouTube algorithm. And okay, so the green line, we get our convergence on the down move here, and that sets up this green support line for the bull trap. And then we've had this blue divergence line. So the majority of the action here has been above the green line, and then we get this switch where it's trying to get below the green line. And this divergence line is when you're on the wrong side of the bull trap support. This is the out of bounds zone. It's divergence across away from the support line. And you can see here you get reactions down against this line when you're on the wrong side below here at the beginning. And then at the end, when you're on the wrong side above it, here you get reactions up against this thing. And that was our whole Elliott 5-wave here, which was out of bounds action up against that divergence line. And then let's get in and look at this. Let's get in and look at this, the bull trap support line. I've been trying to wiggle this line around a little bit as we've been going to get the maximum amount of reactions across it. It's just somewhere in here. And yesterday I had it along here, and it looked like it was bouncing across the top of it. It looked like when I was going to sleep, it looked like it was hitting the top. And that doesn't make as much sense as back testing it. And I think now that we have the picture, I think this gets the most reactions along the line, and it makes the most sense as getting under and back testing this thing. And then that's the same thing that we would want to see here on the yellow line is a back test. That's in the bear or the bull case. You should expect a back test of this line. And then okay, let's do the bulls. So the bulls are gonna need to get up above this thing. So I guess like a 1 week outlook for the bulls would be try to get back above this line and consolidate. And then for the bears, it's a couple back tests, and then it's just get down to this angled tangent line here is the next target. And then once you get along this line, probably wouldn't be quite that fast. Let's see the zone here. So the bulls need to get up, and if they do get down, they're going to have to get back up here in a hurry. But the bears are looking to kind of get down here and test this thing out a couple times from the top, and then test it out from the bottom, and then you get a big dead cat swing, and then look to break that line. So that's the inner tangent. You go here. If you go to the previous cycle where we get this behavior, let's take a look at the previous cycle. So the previous cycle, we were backtesting this Volmageddon line, and we get the same thing. We get a 1, 2, 3, 4, 5 Elliott wave, which looks like a double top, kind of the M-shaped reversal, but that's just the Elliott 5 wave. That's just the 3, 4, 5 testing this support line, and that's what we're getting here too. You break across it, and then you break across it, And we've done that here, break across it, break across it. And then you can see the tangents here. Let me light this one up. So you get this vertical, or not vertical, but downward tangent off the 3 line where you test the Volmageddon line the first time. And that down line is the support line kind of for the downward movement, where you get action across the top, and then you come underneath, and then you dead cat and test it. So that's what this line is here. That line is our, I guess, white, maybe white. Lighten that thing up. Okay, so the same thing. Once we got underneath the Volmageddon line here, we got up and tried to backtest these lines, and then we got down to this white tangent line and started playing with it. So that's the same kind of thing we're looking for here, as we just want to backtest here, and then we want to get down and start testing this line out, and then you get below it and test it, and then you can do your dead cat swing, and then this is the Volcker line, which is the long-term support line. It's like a 40-something year support line. And that's the whole upward trend of the entire bubble for 40 years. And the 2008 is the 12-year steeper up from the financial crisis, and then the Volmageddon bottom is the very steep upwards movement to the blow-off top. So that is the bear outlook, is to just repeat the cycle that we have here on this time scale on this frame. So this is like the weekly early scale, and then the monthly bigger one. And I guess I'll draw some Elliott waves. So I mean, we saw this is a 1, 2, 3, 4, 5. That's an Elliott impulse wave, and the same thing here. 1, 2, 3, 4, 5. That's an Elliott impulse wave, and you get that double top look that double test the long-term support line. But we also have Elliott C waves here, which is an ABC wave here. And then this also is the whole ABC correction wave here is just the A leg of a bigger one. So you get the A and the B and the C here. So that's the Elliott correction wave on both scales. And then you can see this, the impulse, the 1, 2, 3, 4, 5 here is just the B leg of this one, and this impulse 1, 2, 3, 4, 5 here is just the B leg of this larger one. And then once we get this outside tangent set up, and I could probably go ahead and throw that in here. This isn't going to be, it looks like it's right here, and chop the peak off and get the reactions on the downtrend. So I think that looks like a good outer tangent now, and this white one looks like a good inner tangent. I'll turn this back to that color. Okay, so these inner tangents are just kind of looking at the dead cat behavior, and this outer tangent is another central tangent line that's going to split a longer scale bull trap that goes out all the way out towards the presidential election. And I can get into, I think I'm kind of just going off track here, because this was really just an update about breaking this line and looking for the back test. So I think that'll do. Please hit the like button to help me out. And this is not trading advice. I do not recommend anyone watching this channel make trades or shorts or anything like that based on this model. I'm just doing a cyclical model of the credit contraction cycle, and this channel is not a financial advice channel. So, but this is exactly what I'm trading, and I can tell you what I'm trading. So what I have is 80% of my portfolio is bullish, basically, and I have 20% short. And the 80% bullish right now is not bullish stocks. I can tell you that much. I have that in treasuries and cash, and DXY are the things that hold up in these conditions. And it's actually all cash this week because I'm transferring it. So that I have 80% of my portfolio cash right now. And the 20% that I have speculative is all short. It's 100% short. And this is the outlook that I am betting short on. And it's mostly tech shorts because people are long tech. Tech is up too high and it has the most room to fall. The oil has already fallen and it's really tricky to short right now. But I had oil shorts. I sold all my oil shorts and went up and got more tech shorts. And yeah, it's tech. And then there's a couple other sectors that I've looked at shorting. If you go back to my other videos, looking at shorting international markets like the emerging market funds, looking at maybe shorting the Russell, the small companies. All of those are companies that are going to have trouble getting loans right now. And then the big overvalued companies, like that's the XLK. The tech companies are the big overvalued companies that have a lot of room to move down. And then there's other sectors like industrial and energy that's not oil, and those ones usually do bad in these kind of credit contraction conditions. Oh yeah, and also this is not a technical analysis channel. This is a cyclical macroeconomics channel, and this right here is a 3 to 4 month credit contraction cycle where you generally get a down and a bounce and a bounce, and that is the outlook of what we're looking for is just the general credit contraction cycle, general movements. And the bounces could be up or down. It doesn't really, the cycle doesn't really tell you where the bounces are going to go. And right now it looks like we bounced up here. And it doesn't tell you where the down targets are on the cyclical model. But once you start doing the mathematical wave analysis and getting the tangent lines, you can get a better angle at where the bounces are going to land. And then these super long-term support lines just comes from knowing the anatomy of the bubble and where the bubble switched from a lower bull market to a steeper one, and you can draw these support lines, and it's kind of magical. Like when you're coming off a bubble, you unwind these things. If you go back and watch my videos on the Nikkei, I have like the Japanification 4 video that's like wave analysis on the Nikkei. It has these same bull support lines, and it break and back test them just like this 3 times. Break, back test, break, back test, break, back test. The Great Depression, I did that model yesterday, which is really cool. I was able to get an actual daily candle chart that goes on the Dow Jones Industrial all the way back to the Great Depression bubble, and it does the exact same thing. You have 3 steeper long-term support lines, and you get these Elliott waves. I did the Elliott wave on the Great Depression. It's this exact same shape. It does the exact same thing, and the candles on the Great Depression aren't good enough to see if it was 5 waves on the B legs, but you can definitely see the ABC correction waves. And so this is the model, and that is the breaking news that we just broke all of our support levels right here. And there's just a really, really long way to go until we get to the next support area down here at the Volcker. Other than this downward tangent, which should get some action. So thank you and happy trading.